Hello and welcome to etnow. You're watching IPO Central and my company's focus today is Excelsoft Technologies. The company's IPO is opening on 19th of November, closes on 21st, price between 114 to 120 rupees per share. It's an IPO of 500 crores which includes a fresh issue of 180 crores and OFS of 320 crores. And the company is valued at nearly 1400 crores at the upper end of the price band. And joining me today is Mr. Dhananjaya Sudhanva, who is the chairman and managing director of the company, and Mr. Prashant, who is the head of strategy. Gentlemen, thank you very much for joining us today on etnow. To begin with, sir, you are a company which is into vertical SaaS focused on learning and assessment. Can you just elaborate a bit on what is the product about and how what kind of services do you provide?
Yes, we have built a suite of products broadly to address the online learning segment and the online test and assessment segment, which is bigger for us. The idea is to use leverage on the technology penetration and the computing penetration to provide courses online, quizzes online, to make it simple. Learning can actually be that much more sophisticated when you learn online because we have the ability to personalize learning. So depending on who is learning, their prior learning facts and the learning style, our tools will be able to make the content malleable to suit the learning style of an individual. So it's basically to enable learning from anywhere, anytime. That's the learning part of it. On the assessment part, it's a little bit more elaborate. Typically, what comes to mind when we talk about technology driven assessments or multiple choice kind of assessments which are taken online. Today's technology enables us to use answer scripts. In fact, we have a customer who gives us 13 million answer scripts in a year. And these answer scripts are scanned, and the scanned copies are provided to us, and we are able to use AI, fairly deep tech AI, to convert different kinds of handwritings. So 13 million answer scripts means 13 million different types of handwritings. We can convert that to text, and using AI and the prior learning, we are even able to auto-mark it. So that's the new generation of assessments for which our tools are being used. All tools which we have developed, whether it is in the learning area or in the test and assessment area, the IP is ours. We license it to our customers. Customers are typically test providers, learning companies, publishers.
Mr. Prashant, you're raising 180 crores in primary issue. Where is it going to be used for?
The objects of the issue, the 180 crores of fresh issue primarily goes into upgrading the infrastructure. We are primarily adding IT infrastructure across the board. That's the first use of proceeds. Apart from which, there is use on physical infrastructure that includes facilities, land building. That's the primary use of the IPO proceeds.
Sudhanva, you mentioned about the fact that you use, it's a service providing software as a service that you provide, but you use extensive AI or artificial intelligence in this process. How do you go about, developing these tools, and what is the kind of, capability that you have with respect to AI?
Yeah, we have a full stack hardware infrastructure for AI in our offices, which means a layer of GPUs, a GPU farm, and on top of that, VLM and various LLMs. Different LLMs come with different strengths, and based on the problem we are trying to solve, we have the ability to configure the GPUs and LLMs to solve a particular problem that we come across. I talked about handwritten assessments. We have assessments which are done on conversations. So if I'm having a conversation with you and if that has to be assessed, there is a AI agent that we have built which can assess. So there are multiple uses of AI, but it runs on our stack. We don't use cloud-based AI services. It's all in-house so that we protect the data and the code.
Also tell us, I understand that these are proprietary AI products that you have made, or do you have intellectual properties for them, or do you use public open AI as well for your assessment of these papers?
OpenAI is one model, and there are other models, as you know, Claude and Google Gemini. So on each GPU, we will have one of these models, and we tune these models to meet our requirements of what happens in the domain of learning and what happens in the domain of assessments and testing. So to that extent, the LLMs are customized and used for our business purpose, and it's all on our GPU form.
My understanding is that you have two main clients. Basically, you have say 76 clients, but two main clients are basically Pearson Group, which is the education group there, and Ascent Learning, which is there. These two are the main ones, and that constitute a large chunk of more than half of your revenues there. What is the kind of arrangement that you have with these groups?
Pearson, actually Pearson is a PLC holding company out of UK. They have 12 different independently managed businesses. Pearson View is a business which is independently managed with its own MD, with its own board and CEO. They are mandated to carry the name Pearson, but it's called Pearson View. Similarly, if Pearson is working in the K-12 space, the K-12 education space, it's a completely different unit. So for us, we work with 12 such independent Pearson companies and provide products and in some cases services also. So it's not one customer. We look at it as 12 different customers. There are 12 different customer relationship managers who manage these accounts, account managers. And at the back end, we are obviously using the relevant team mix.
Yeah, but what about the relationship that you have or business relationship that you have with them? Even if it's 12 different entities, are they long-term relationships that you have?
Each entity we have a separate contract, and these contracts are typically 5 years in duration, and every year we work on SOW, statement of work, which defines the scope of what we have to deliver during the year. So we are sticky because we have a 5-year contract with each one of these units.
Prashant, can you come in here and you can elaborate a little bit on the kind of pricing strategy that you have here, in what way it is done? Because nearly 59% of your revenues come from Pearson, so that's a very high risk model that you're carrying forward. So how sticky is this relationship, and is there entry barriers for any other competition to come in here?
Sure, Sajid. As Mr. Sudhanva mentioned, we have been sticky with Pearson Education. Over the years, it's been 18 years now, we have been working with Pearson. It's a long-term relationship. And the kind of work we do with Pearson is also distinct. It is deep in domain. It is a deep understanding of learning and assessment, which helps us win projects from Pearson. And these projects are also multi-year, And it is not that it's a typical IT services kind of a business that we do with our customers, particularly with Pearson when I'm talking about. It's deep domain, deep understanding of tech in education, tech in assessments is what helps us deliver these projects, right? That explains you why that there is this stickiness. It cannot be that you just replace us just like that. That may be difficult for any customer.
What about the fact that there could be new competition which is coming in here, or for that matter, is there a minimum guarantee of revenue that comes in from these clients for you as well?
Sir, can I take that question? Sir, in all our contracts, we even though the duration of the contract may be 5 or more years, we always operate on a minimum annual revenue guarantee plus a revenue share based on, in case of assessment, based on the number of tests that are delivered. We get a revenue share. That's typically how our commercial model stacks up, both on the learning side and on the assessment side. The reason is the minimum annual guarantee should cover our costs, and we want an upside when the volumes go up.
Is there a pricing?
Arrangement.
Is there a pricing pressure for you?
One more question. No, sir, there is no pricing pressure. Many of these clients work with us for one thing, sir. I think it's important for me to state it. We always have had a group inside Excelsoft which is dedicated for innovation and new product ideas and development. So most of these customers, whether it is Pearson units or any of the other customers that we have mentioned, come to us because they think we add value to their own thought processes, and we add value to make their products better for their businesses. It's a differentiated value proposition that we offer so that they become more profitable in their B2C model. So that is a team of 65 people, and we relentlessly research, ideate, innovate, and build newer products. I think that's one of the key reasons why they come back to us and don't tend to move away.
Have what you call seasonality in this business, because I was looking at your Q1 numbers where the EBITDA margins were around 18.2%, but in FY 22 or 25 actually your EBITDA margins are 31%. So a drastic drop in your EBITDA margins happening in Q1. Is there a seasonality in this business for you, and which are the quarters which are normally good for you?
Typically, Sajit, the last quarter, which is the Q4 for us, which happens to be the first quarter for our customers who are predominantly in the US and UK, they will have more budgets, and therefore our revenues will be higher in the last quarter. While the revenues are loaded heavily on the second half, the expenses are not seasonal or are not across the quarters. Expenses are typically same across the 4 quarters. Therefore, the margins, the EBITDA and the other margins that we can see would be higher in the second half. That is what is contributing to the reason that what you see in the book, which is Q1, is lower on EBITDA, but it will be typically the same across years. It has been historically the same.
I also wanted a clarification on the corporate guarantee provided to the corporate promoter there. What is this guarantee and what are the covenants of this guarantee?
Earlier in the history of the company, when there were private equity investors, the decision made by the entrepreneur, which is promoter Mr. Sudhanva, was to buy them back and give them an exit. We had to create a vehicle to buy it back, buy the shares back from the PE investors, and in order to do that, we had to create a special purpose vehicle which had to raise the money. And for that purpose, there was a NCD that we have issued now with a private firm, and for that NCD there is a corporate guarantee that has been provided. However, as you would see in the OFS, there is a significant portion of money which is being diluted by the corporate promoter, and that proceeds of the OFS would go to clear those NCDs.
That means that these guarantees will go off once you pay off or the redeem those NCDs. Thanks for the clarification, sir. But let me come to the next point, which is with respect to publishers across the globe. Now, your concentration is to Pearson Group. What is the strategy to go to other publishers or other universities which do such kind of assessment or e-learning which is there?
Traditionally, Pearson had been our largest customer, no doubt. However, in the last few years, we have been able to add several more customers into our services business, and as you see, the services business is spread across geographies as well. So, additional customer accounts would add to more revenues from the services business and overall, and that would help us manage the concentration at this point, whatever is you see at this point in time.
Sudhanva, can you also give us a perspective with respect to how AI is being used by publishers and universities going forward? You spoke about the fact that 13 million transcripts or answer sheets are evaluated using AI. Is that the new norm going forward, as many more universities look at this kind of transcripts?
AI has a role to play in multiple facets in the learning and assessment business, Sajid. When you look at assessments, what Mr. Sudhanva spoke about was one of the examples, which is e-marking of handwritten answer scripts. AI can be used in a multitude of other ways. For example, you have a question bank, right? So that means there are multiple types of questions which are stored in a bank. Now you want to generate additional questions. You would do that enabled via AI. That means a human will not have to really get in and author questions individually, but they can take the assistance of AI and get a question generated, review it, and publish back to the item bank. Similarly, there are many other things that you can look at in the realm of assessments where AI can be used, like checking the similarity between two questions, doing a lot of test forensics, and the like.
And you're creating a stack of products, so which can be used by multiple, or is it only specific to publishers, which you do normally? Do you have a buffet of products which can be used readily and taken off the shelf by publishers?
Yes. So what we are doing is creating an array of a suite of tools, AI-driven tools, which can be used independently or used in tandem with an existing product, predominantly with our own products. So this helps us in multiple ways. One is that it helps deliver more value to our customers because of the introduction of AI tools. The other is that when we work with customers, we could have a good head start with these AI tools where we are adding value to their existing ecosystem, and then from there we expand into the other areas of operation with the same customer. In a way, if you will, it will function as an entry strategy for newer customers.
Okay. Yeah, please.
Customers include qualification authorities. There are so many of them in the UK and the US, the Western markets. It includes academic institutions. It includes corporate entities as well, in addition to publishers. So the diversity of customers are there. Now we have great case studies in each one of these sectors. We will have to take them to others, and these are success stories which will amplify our growth going forward.
Just to add, Sajid, the qualification agencies which we have acquired as customers, like the AQA Education in the UK, Training Qualifications UK. These are large bodies which provide several thousands and millions of exams, right? So similarly, there are these certification agencies. For example, the Chartered Quality Institute in the UK, which provides certification for audits like internal auditor and a lead assessor of ISO and all of that. Very reputed globally. So the Chartered Quality Institute, to deliver their certification exams, they need a platform and they use our platform there.
Gentlemen, it was a pleasure talking to you today. Your IPO is opening on November 19th, closes on 21st. Price between 114 to 120 rupees per share. The IPO is of 500 crores, which includes a fresh issue of 180 crores, and the company is valued at a little over 1381 crores at the upper end of the price band. Thank you very much for joining us today on etnow and being part of IPO Central. Thank you.
Thank you very much for the opportunity. Thank you so much. Have a good day.
Thank you. Appreciate it. Thank you.